So again, we're moving into December 8th, 2015. For you guys watching on recording, I'm going to preview. I'm not going to talk too much about next week's FOMC meeting because we're going to have an edge meeting a day before that event. We've had some good price action this week, especially in the first couple hours, as guys are squaring up with year end and this big meeting. Plus, late last week, the ECB didn't deliver on dovish comments, and this market, led by Europe, strong 6E, a real weak 10-year note, which is the Bund in Europe, and the European equities took a bath. They all rebounded and readjusted when Draghi, was the counterpart to Janet Yellen for the ECB, kind of gave more what they want in a late Friday speech. And now you have the San Bernardino terrorist attack that continues to flow as to direct connections to kind of like an organized plot. And it just seems the theme of these attacks are, they're much more bunched up than they used to be in the past. They were few and far between, and now they see them every couple of weeks. And starting with, well, in recent, the Russian plane that was down leaving Egypt, and then the Paris attacks. Now this one. So it's then there's others. So it's just like Mali, I think, also had an attack. So it's like, what and who's next? So markets obviously aren't going to treat that as bullish. Let's remember that. And that's where we're at going in here the last month of the year. I think next year is going to be really busy. I think next year is going to have the indecision on how fast, how slow is the Fed going to continue to bump rates. Pretty much a certainty they're going to bump them a quarter a week from tomorrow. But what in the statement are they going to kind of give us directions and smoke signals and how dovish or hawkish is that statement going to be? It's going to be very important. It's going to be very volatile a week from tomorrow if you're watching us live. If you're not, it's a week from, it was the mid-December meeting in 2015 if you're watching this on a playback. That day is going to be busy, 1 o'clock Central. What we're going to try to do here is create a little more framework that you guys are going to have to take on your own also, because everybody's plan is going to be a little different. We got to understand the styles. I did a very short track 2 video on trading styles. It's in track 2. It's a very short video, and there's a write-up in the track 2 ebook that writes out a little bit about what the different styles people implement into these markets. We're going to cover it in a little more detail and kind of fill in the blanks with a trading plan. But first, because there's a couple other things I want to go over, we're just going to breeze through scalping so you know without any doubt what scalping is. And while you might not want to be a scalper, and I wouldn't advocate it, you want to read the market as a scalper and trade it as your time frame. I'll say that again. You want to be able to read the market as a scalper to highlight good entries and exits, but trade it within the time frame that fits your style, personality, market, targets, and the rest. But to understand a scalper in this course, in this session, in this program, you'll know what it is. I've read and seen videos on what other people define scalping as, and most of it's wrong, or there isn't enough detail to truly understand it. But I'll say this again and again. I'm not trying to advocate people be a scalper. I advocate people learn what scalpers do. Highlight good locations by understanding the short-term guys are in trouble. So on a short, medium, and long-term basis, scalping is as short a term as you can get. All right? High-frequency trading is the shortest term you can get. That's beginning to get phased out. But scalpers, and I'll talk about this in a couple slides, want to be long bids, short offers. You need to know what that means. So it seems like a lot of you guys got that book, The Switch. We talked about it at last week's event or session. get it. If you're watching this and you might have skipped last week's on recording or whatever, the name of the book is Switch. It's written by the Heath brothers, Heath. Two guys, they're brothers. They wrote it. I believe it was published in 2009. Good book. And like anything you do now in life, you should relate everything back to trading. If it's driving on a four-way stop and two guys reach the stop sign at the same time, tie goes to the trader as we make the quicker decisions. If you're going to stand there and look at a guy who wants to go, and then you're going to get into, just go. All right, so everything's now about trading, whether you're new or old or in between. Let's, Ken, you'll be here, so we'll go over Ken's suggestion for a good chart. Let me stop the webcam. Screen share. I can't screen share like I did with the other ones. This browser is kind of going back and forth every time I hit the play button and everything. So let's get going with trading styles into plans. We'll start with this chart. We're not going to cover all the styles today, and we're not going to cover the plan today, but we're going to start with scalping. It's always a good idea to start at the beginning. All right, so first of all, let's see if I can do this. Hold on a second. Types. Like I mentioned a few moments ago, in track 2 in one of the videos, I briefly talk about the different types and time frames. As a scalper, pretty much the shortest term trader you'll be. Then there's the day trader, which I think most of us are going to fit into or want to fit into. Then there's the swing trader, which is multiple sessions. And then there's the investor, multiple months and years. Everybody trades, but the time frames are drastically different. One common denominator is location. Whether you're buying a condo, a house, a mansion, it's all about location. In trade execution, it's all about that. So let's start with scalping. What are some of the traits of scalpers? Number one, very, very sensitive to volatility. Probably a good rule of thumb is north of 20 plus trades a day. The busier the day, meaning the bigger the range, the more trades everyone should take above average. But even average 20 plus trades a day, meaning open and closing a position greater than 20, is one of the traits of a scalper. Multiple trades, incremental profits, incremental losses, trying to catch a sweep. In and out is a good phrase to use for scalping. In and out, and understanding that the size of a scalper is also going to vary. Whether you kind of adjust your size intraday or just overall. There's scalpers who could scalp oil, gold with 1, 2, 3 lots, 4 lots. Or the ES with 3, 4, 5 lots. And then I've seen people scalp the ES with 200 contracts. So just don't think of, a big trader is automatically not a scalper, because that wouldn't be true. They need lower commissions. That's absolutely important because of what? The amount of trades that they're going to make, the amount of personal volume that they're going to have. So they're going to have to work hard at getting lower commission. We'll do a session about how to drive commission lower if your volume is somewhat decent and you don't need to be up to 20 trades a day. If you guys are up to 20, 25 contracts, not trades, but contracts a day, there's a way to lower your commission without changing your broker. Remember, scalpers, more than any of the other styles, really want volatility. It's just the more volatile, the more money that we've been able to make over the years, including 2007 and 8, including August and September of 2011 during the debt crisis when the U.S. credit kept getting downgraded by the rating agencies. That was August, September of 11. Make your year in 2 months. So volatility, because the market gets out of whack more, and it's less efficient in volatile markets or conditions. Bigger winners usually come with sweeps. What's a sweep? It's that moment where a breakout occurs through the lows, through the highs, through consolidation, right? So they'll have incremental profits, and they'll really try to then get a piece of it in a scale. And I didn't add this, but scaling is important to keep you on the trade. Scalpers aren't always all in and all out. Scaling is really important because you could breathe after you take a tick or two profit and try to get the sweep for 6 or 7 ticks. And depending on the market, might be 6 or 7 points or 3 or 4 points, depending on volatility that day. The point is, bigger winners come usually with the momentum of the breakouts, and you just got them. You know, they can press it through a level. I'm going to show you something on a dome in a second. Some other traits, long bids and short offers. What does that mean? You got to know what that means back of your hand. What does it mean to be long a bid or short an offer? It means you could scratch right now. I'm going to show you that on a dome. If you're long a bid or short an offer, you have an edge. Now, it's a micro edge, but you have an edge. And that's really important for scalping. It's not as important for day traders, swing traders, and certainly investors, but it's very important for scalpers. Average winner and loser is usually 1-to-1 until a breakout, and then they could, have a slightly bigger average winner. The whole key is not to have big losers, but to have some big winners. And the whole key is to have, a better win rate. But winner to loser, as far as profit loss goes, is generally 1-to-1. That's the goal. It's not 3-to-1, 5-to-1, and all that. It's to have a higher percentage of winners because you're picking good locations, and when you get the breakout, you can have slightly better winner than loser and avoid the big loser. And I added this, much higher percentage of winners than other traders. So other traders might be content to be 60-40. 60% of their trades are winners because they slightly want a better average winner than loser, so they could be closer to 50%. Scalpers want and need a higher percentage of winners because they're closer to that 1-to-1. All right, now let's go to a dome and show you some scalping. This is the ES right in here, trading 59.5, 59 3/4. What does it mean to be long a bid or short an offer? Well, if I bought it right in here, I'm long the offer right now. Now I'm long the bid. Make sense? And just took a +2. Bought the turn, was long the bid. What does it mean to be short the offer? I'm going to be short the offer in a second. Now I'm short the bid. I need it to turn offer. It just did. Now I'm short the offer. Just made a +1. Those are a couple quick scalps. Trying to catch the turn. Now you wouldn't do it that much or just on that price action. For example's sake, I'm just trying to get long a bid, short an offer. It's an exercise to do it, and we've talked about it, catch the turn. If I bought 59.75s, I want them to go bid, then I could scratch them. I'm long an offer, not a bid. As a scalper, I'm thinking, where am I going to get out? Do I take a -1? Oh, I could scratch it. No, I can't now. Now I have to take a -1. I'm long an offer. Now I was long a bid, long an offer. I'm just trying to get long a bid and show you what that looks like. Not able to do it. There. See when it goes 59 here, I'm long a bid right now. I could scratch it, and it quickly went, but I could scratch it when you're long a bid or short an offer. Short an offer. Now here's the DAX next to the ES. DAX is outside its cash hours, but when we say like in the trading, when we talk about the DAX leading, you'll see a pop right here, and then if you're bullish, you could buy it here. And that's not a scalp trade necessarily. That could be a position trade and or a day trading type of position. You could see it kind of walk up. But again, we're looking for breakouts if you're a pure scalper. You're looking for relationships to get you long or short. Things aren't moving right now that great, but I mean, like this time of day. But if I could get a scalp where this DAX over here, your screen share is about a second or two delayed. My audio is pretty pinpoint, but what you guys see happens a second or two after you see it. So just keep that in mind as you're watching this video. But let's just say let's say I bought the 60 evens right in here just one time because the DAX went up. Well, now this is a scalp. I can make a quick +2. I made 2 ticks on it, all just based on a market relationship. Watch the recording of this session if you didn't see that. But here's the NASDAQ over here. Here's crude oil. This is one way to kind of line up your domes. But that's what a scalper would do. And you could see how quickly you can get up to 20 plus trades. And the faster and more the market's moving, the more you're trading. Got to reiterate this. This is not a class I'm doing because I want you guys to trade like this. Just want you to understand long bids and short offers because there are a ton of people that will always scalp. And I think scalping is actually going to come back around and be, as the high frequency gets phased out more and more, there'll be more opportunities to catch turns. You won't be competing against those predatory systems. Any questions about a scalper? And then how could this help you? And we'll segue this into our next session when we talk about day trading types. How does this, let's say you were bullish down in here. Well, you could use the same reason I would get long as a scalper as a reason to get you long as a looking for 4, 5, 6, 8 ticks. Make sense? Practice the turns, but it starts from the earlier exercise we did in this course, which just has you catch the turn based on the size in the book, and then tie an ancillary and follow what other markets are doing, no matter what time frame you're going to implement. Zane's got a question. Why would high-frequency trading get phased out? I think it's not going to get phased out. I think it's going to get forced out is a better word because of the regulatory agencies, and it's a predatory system, and there's been a lot of outcry that there's been some shared information that they've been able to get. That was a book called Flash Boys by Michael Lewis about a year and a half ago. Brought a lot of attention as to what it was. Spoofing has already been regulated, the anti-spoofing rule that the CME imposed about over a year ago now, about 18 months I think ago. That's changed how the book has looked for the better for guys like all of us. But I think that the high-frequency stuff will get phased down because of regulation, because they're predatory and they're front-running. That's the outcry on HFT, high frequency trading, is the front running, and front running's always been illegal. That was also Jay's question. Better word, better phrase is instead of saying high frequency trading getting phased out, getting pushed out, forced out by the regulators. That answer the question also for you, Jay? Only good for guys like us. The more transparency, the better. What you see is what you should get. This isn't an exercise you could do or not do, but I mean, I don't know how important it is. It's important to catch the turns, but follow the leader. We talk about some of the best trades today, earlier today. Well, it's December 8th was the lead lag in kicking your butt into a trade because the DAX did something. And if you had a stance of being bullish or bearish, all the better. Here's a important exercise that I think if you don't do, it's crazy. It's easy to do, and especially if you're in a gray area of struggling. If you were in a prop firm and worked for me, I'd make guys do it. That is, strip out the emotion. Strip out the emotion of where the market's going and just play it from the long or short side. Come into the day and say, all I could do is buy it or sell it. And don't even look at the overnight charts to say which is a better one to play. Forget about that. Flip a coin. Tails, you have to play it from the long side. Heads from the short side. It doesn't mean you got to scalp it. Doesn't mean you got to make a lot of trades. Don't matter how many trades you make. You have to find locations to buy it all day. It strips the anxiety of where it's going and allows you to just focus on one side of the market and focus on what's most important, and that is location and then getting out. But every time you buy it and maybe take a loser, you don't get to be, you're always right by buying it. Your location might be off, it might be wrong, but your idea of it's going up is right. So you don't get beat up as much about being wrong. I thought it was going up and it went down. No, it's going up. You just got to find locations to get long or get short. Work on that exercise if you're not trading live. That's a sim. That's the best and most efficient way to use sim. Any other questions about scalping before I move on to a chart that Ken made me aware of that we'll build for you guys and see if whether you're using market delta charts or not. I'm sure any software you're using has this functionality. All right, let's go to the charts then. Ken, are you here? I got to switch my screen share. Let's see. This is one you'll be familiar with in the trading room. And let's duplicate this first of all. It's easy to duplicate a chart, and we'll put DAX/yes. All right, that's the name of it. It'll duplicate this chart and overlay it. There it is. First thing you do is you duplicate a chart. I would strip out this down in here. So let's see toolbar. Let's show that. No, this is the one I want to show. Just bring that down like that. So how do you do it? Could you walk me through it though? So you don't have the footprint, first of all. Okay. So where do I start? In here? He says start in here. Chart style is going to be connected line. Periodicity is going to be 30 seconds or 1 minute. We'll start at 30 seconds. And hit OK, correct? There it is. Okay, that's good. Let's get rid of some of these also. All right. So, look at that. That's just a 30-second look at the S&P. Now, add instrument. Put it at the bottom, Ken. So to add an instrument, you go to Add, Instrument. You pick your instrument from your list, which is the XG. And there it is. But now you got to go down in here. Change this to connected line. Maybe change the line color to, well, keep it dark green. Change it to whatever you want. And this is going to give you a nice compare. The bottom chart here is the DAX. You could also adjust this. You should be able to pull that up. I can't. Oh, we got this other chart in here. That's a paint title. Let's get rid of this one. All right, now here we go. Now you can make it 50-50. Dark green is the DAX, the light green is the... So I don't like the dark green. I think you're better off going with lime green, keeping them both bright. This is the DAX again below on 30 seconds, and this is the ES. You could see how they come off together. You could see, if you tighten them both up, and this would be cool, how they're charting very similar, right? They both have a high here, lower highs there, come off. They both make lower lows. They both have breakouts here. DAX has a breakout here, comes back down to it. Here's the one that I showed guys in the room, was talking about it. This is important to look at with the divergence. So if you take a look at this, hold on one second, guys. All right, guys, I'm back. So here's what's cool. I got to show you this, and I don't know, it's cool, but recognizable. And we talked about this in real time. Remember in the room today, I said down in here that the DAX didn't seem as weak. Right there, you see the low it made right there, and you see how the low was down there. But you look at if you look at the ES, you see the low that it made right there. If I draw a line through it, it made a lower low. Make sense? It makes a lower low, and then you come down here and you look at the DAX, and you're like, man, it's not really that close. Is that a time to say buy it? Of course not. It's a time to think, grow some horns. But that's the cool thing about this chart is you can, and cool thing about being part of guys looking at markets the right way is you could take your vertical line and run it and see a lower low right at that gray session or gray shade, but yet it's not a lower low in the DAX. There was another moment at like where the DAX seemed weaker that I mentioned in the room. It was right. Let's get rid of this line here. It was right. It was right here. Let me show you guys this. All right, this is important. Pay attention. If this market in the S&P goes from there to there, right, and it rallies almost 100% of this break, right? You look at the DAX. Now the DAX went from here to here, right? it rallies barely 25% of this break. Make sense? Well, what sense you make out of it is this guy is weaker and this guy might be expensive. It might be expensive. And if this guy is weaker, it could keep you from staying bullish in this guy and maybe looking to sell this guy down here. Or the ES following this guy. Best trade of the day was when the ES went through. I remember the price, 55 half, 55 3/4. It was right there. It hung there for like a second or two and gave you a chance to slap the heck out of it when the DAX did that. DAX led it. That's what we mean by leading. Was that little hesitation here of a few. It was even more than a few seconds. It was, and then it was no heat, effortless down 5-point break. This is the first clue that the DAX is weaker because you're comparing it to the fact that this guy already ran up the whole break. He ran up the whole mountain, and this guy barely got up 20%. So what does it do? It chops sideways inside this yellow box and looks for a place to break out. That was the hole in the box. Any questions about that? Ken also adds, it keeps it clean and you could add more markets if you wish. This is a great way to compare and contrast. You see how I'm not mad I didn't think of it myself? Some people would be. They think the guy moderating has to think of everything. That's not what good communities are about. The great chart, Ken. I'm going to show it more in the room for you guys that are also in the room. If you want to add another market, right-click, go to Add, go to Instrument. It'll bring up your instrument list. Let's say we want to add the Euro stocks. The Euro stocks is, what's the Euro stock symbol again? I think it's, EX. My brain froze up on me. Why isn't it in here? I got a chart of it. What's odd? Alright, now let's just go in. EX pound. Oh, I think it was higher up on, well, either way I got it here. Why is it doing that? Oh, it's changing it up. Well, here it is. Now it's got the data. So it changed it up here, the main one. But let's, this is the, probably the ES still. Yeah, it is. Alright, hold on a second. Let's see if it downloads. There we go. That was strange. Let's get into, trying to get that VWAP off. Anyhow, this is the Euro stocks. So, but you want to get it where you're getting it moved. You don't want this thing too compressed. You know what I mean? You don't want it too compressed. If you take the Euro stocks, you could see Euro stocks and the DAX will trade even more similar than the DAX and the ES. And you could watermark these to give you a sense of what each is, but once you're used to it, you know one's Euro Stocks, one's ES, so you might not have to do it. So Ken says, if more than 2 markets, click scale. Where do I do that? Give Ken a second to. If you had more than 2 markets, you could click scale. Oh, right here. Right? Use multiple scale. From here? Which one do I check? Oh, use multiple scale. Huh. Ken's a genius. That's it? Nice. That's the last time I make fun of the English. For the week. So you got to do that for every one also. So that's pretty neat. Give me 1 second. I'll be right back. So go into the scale, go into the price pane and right click. This box will come up and then you could use multiple scales. Those with market delta charts, I might put this in a chart definition, but I probably won't. I mean, you know how to build it. Doesn't have to be laid up. For those that are on other platforms, I'm sure there's different functionality. But to me, this is the best way to start learning market relationships and how these, because you got this vertical, see this vertical, let's blow this chart up. See this vertical horizontal line? I mean, it gives you a nice look as to what the heck's going on. Let's even download some more data up here if it does. The whole session. There we go. So this is the Euro Stocks at the top, the DAX in the middle, and at the bottom is the S&P. It's getting a little buggy with this screen share. Importing the data here. There we go. So back at the top is the Euro Stocks, and you could see you tighten this up. Very, very neat. Do you see how? So you could even get rid of some of these signals here just to see it better. Euro stocks could barely make a low. ES made a low down here. Follow my cursor. They all look the same in here, right? Failure. Breakouts. You can get multiple markets to show you a breakout. Very cool. Appreciate it, Ken. Encourage you guys to build this yourself, not ask for the chart definition, because I don't want to pop it in on the trading room. I only want edge guys to have this access to this trading, to this chart definition. It's easy to build as you walk through it. Good way to compare contrast, just like the car dealership. This is like or airline tickets. This is like Travelocity. It's throwing up all the airlines next to each other, showing you the prices. Then you follow the highs and lows and market them to each other. You're not going to, and this is important, you're not going to get a trade off of this necessarily. That you're going to see quicker dome next to dome. This you're going to be able to tag the higher highs and the other one didn't. You're going to see that better. But dome next to dome is when you're going to actually see a lead and a lag. I'm going to stop the recording. This will be it for those watching on replay.